Alright everyone, here we are with another video with the Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. I'll ask for returns for you guys to smash that like button, and if it's your first time here, do not forget to hit that subscribe button and click on that notification bell so you don't miss a single video and you're up to date on our chart analysis here with 42 Vision. So I have pulled up here the SPY, and we continue to see the volatility and the markets are pulling downwards, right? We're gonna zoom in and see what happened today. Even after CPI data came in slightly harder than expected, as you see it popping up on the screen, it came in harder over month and year over year. So very interesting stuff. We're gonna break it all down in today's video. We're gonna look at the charts with 42 Vision, and we're gonna look at what Cramer had to say yesterday about today, and we'll see if he's right. But before we break it all down, I want to share with you guys the home run opportunities that were mentioned this morning over at the Discord. So the home runs of the day were spectacular and beyond expectations, and if you guys want to know about these stocks early on in the pre-market and receive this edge and clarity over the charts with 42 Vision indicators, check out the link down below in the description to the Discord and getting connected to our bots and 42 Vision indicators and become part of a growing community of investors all looking to learn and grow together. So the stocks I mentioned this morning gave jumps of 3 to 5%, 5 to 10% plus, but our home runs of the day were from our Apple bot and our Tesla bot. Our Apple bot sent out a bull indicator at 9:45 a.m. and from that moment forward, call options went up 80% plus within an hour, guys. And our Tesla bot sent out a bull indicator at 9:45 a.m. as well. And from that moment forward, continuation of strength in the charts, and call options went up 100% plus within an hour, guys. If you guys want to know about these stocks early on in the pre-market and receive this edge and clarity over the charts with 42 Vision and our bots, check out the link down below in the description to the Discord. We look forward to having you join us, and we strive for opportunities like these every single day. Let's jump into these charts. So here we are with the SPY pulling downwards and continuing that downward effect, even though things popped up slightly, right? Which is what we're going to look at together here, even after the CPI data came in higher than expectations. I'm going to pull up the bull and bear indicators, which you can now gain access to as well. The link is down below in the description to the 42 Vision indicator, getting connected to our SPY bot, our QQQ bot, our newly released Tesla bot, and we have other bots on the way so that you can receive the clarity and edge that you deserve within the volatility of the markets to maximize on opportunities. And you can now join the members using these resources to maximize in either direction by receiving this clarity and edge over the charts. So here we are with the SPY. It's been under a bear indicator on the 1 hour since way up here at 386. Things started to shift from the rip area here, which is the green bars, back down even slightly before that up here at 389, right? It kind of hit a peak. You could see that consolidation and struggle and rejection, and then things have been going downwards. It did a full transition from the peak area back on July 8th till today in the pre-market of a dip area, which is white with red borders, right? Every single time we hit white with red borders, there is an eventual reversal, as you could see right here. This one consolidated for a few days before it took off, and the previous one actually started off around the 2 dates that it consolidated, and then it took off, and the bull and bear indicators are there in 42 Vision to give us that extra layer of confirmation, right? So right now we just hit a dip area, and the stock tried to come back up overall, the stock market, right? The SPY, and you could see how things are now shifting right back down. And we're going to talk about key levels here that are going to be important going into tomorrow and even moving forward, because the more you zoom out in the bigger picture, this has been under pressure and under a bear indicator for quite some time. Since April was the last bear indicator that popped up within the volatility, and it has held true since way up here at highs of 449 all the way into this point that we're at right now, right? Now when you zoom out even further, as I've shown in other videos, we've compared it based off the 1 week to what happened in 2020 and 2018. These were corrections / crashes that were really fast, lasted a few weeks and months, and right now we just hit 2 dip areas with 42 Vision showing us this after 6 months, and we're right now going into 7 months of this bear indicator from way back in January. And I did coverage every single day from January till March, And then once this bear indicator popped up back here on the 1 day, as you could see it, and it actually started to pull downwards from March to April. I have not done as much coverage because there's been individual stocks moving. And right now, this is a critical point because it's not just the 1 week that has a bear indicator, but also the 1 month, guys. This actually popped up right now and confirmed from June to July. If this continues and it actually goes further than the last 2 times it popped up on the 1 month in 2018, 2019, and 2020, well, then we're looking at something similar to these years back here in 2000 and 2008. There may be a point where it tries to come back up, but if it doesn't have a bull indicator and that bear indicator is in full effect, well, the continuation may continue to happen. This one lasted almost 2 years. This one lasted about 1.5 years. So this is where it becomes very interesting, and it does not mean it's going to act the same way or it has to move the same way, because it doesn't guarantee or state that it's going to move or exactly mimic what happened here. But at least I'm using these 2 other scenarios as guidance, because right now we're in a state where this has been for several months. We've done transitions and we just hit our first 2 red bars and 1 first after the bear indicator, right? And in the last 2 times, it actually happened very fast. It ended right after the 2nd bar of the bear indicator. So right now, if this continues, the only thing we have as guidance is history to show us based off the 1 month. Now, once those bull indicators pop up, they do last for several years and several months at a time. So based off the 1 week though, it actually shows us a little bit more of a zoomed in picture of these time frames. The 1 month is a lot bigger time frame, but as you see here, you could see that the last 2 bull indicators that popped up were right here after dip areas, and they actually lasted based off the 1 week. The first one here for 1 year and the other one here for almost 2 years. And in the history, it has shown that every time they pop up, they last for several weeks to years and even months, right? Based off the bull indicator on the 1 week, especially after it hits a dip area and starts its transitions and it's followed by a bull indicator. Right now, we have not hit a complete dip area. We continue to have volatility. I personally believe volatility is going to continue to exist in the markets. Does not matter what stock it is, what index it is. I personally believe volatility is here to stay for now until we finally find a bottom. And no one knows the bottom, but we could use history as a guidance and what the charts are showing. And I'm going to continue to watch 42 Vision on how things react. And we've been under a bear indicator since January. We've known it, and we're here still consolidating and fighting based off the 1 week, the 1 day at these levels. Now, let me share with you guys what Jim Cramer had to say yesterday about today, and if this is how it's looking to you, or do you think he's wrong? He stated that July 13th will be the market bottom. That's what Jim Cramer said. And in this video, he said it live, right? You can actually watch it and look it up. And you could see how confused one of the participants is here. And this guy quickly went to grab his phone and distract himself from what Jim Cramer's saying. Now, Jim Cramer said it with such conviction. And some people say he's notoriously known for his predictions. And sometimes he's right, sometimes he's wrong, right? But they say he's notorious for what he says. We'll see if he's correct. But today just happened, and the stock market is pulling right back down to where things started. So if this turns out to be the market bottom, he's basically stating that we're going to break out back above 390s. And then within the volatility, find its way back up towards the 400s. But the bottom that we've reached recently was 364, 362, give or take. And some are saying we're going back that way. Now, how could this be the bottom right now? This is what I'm thinking, right? Within the volatility, how is it the bottom when we have, in the bigger picture, a bear indicator on the 1 day since way up here at the 440s, a bear indicator on the 1 week since January, right? And we're not in a dip area. We're just in the middle of things at red bars, right? Extreme weakness based off 42 Vision is when we hit consecutively back-to-back white with red borders. We haven't done that. We've done it separate times within the volatility. This is why I believe Volatility is here to stay, as always. Not financial advice, my opinions and perspective alone. I could be completely wrong, but I'm going to continue to watch within the volatility and maximize within the moves with 42 vision. And how is it that this is the bottom when we have now such news coming out where the US rate futures lift, right? Chances on 100 basis point hike in July, the Fed meeting after hot CPI data. Now, this is all speculation right now. We do not know until the Fed makes the decision and until the meeting comes. Then we also have the speculation of 2 quarters of negative GDP, possible recession, right? And then we have here, with all of this news and current sentiment in the market, creating a point where things can shake up if there's further surprises. I mean, CPI data surprised a lot of people. No one saw it coming above 9%. I mean, some people were aiming for 8.9, maybe worse 9. It was 9.1. That's a big difference, right? Now, the Fed to raise the rates by 75 basis point is with a chance of 72% right now. And then others are stating that in the last time that we went up to 75 basis points, that there wasn't going to be another one. Now the chances are a lot higher. This is still pretty hawkish, right? And then now it's in the works of people thinking 100 basis point hike this month, which is significant and pretty high as well. If you guys remember in the last meeting, Jay Powell stated that 75 basis point hikes is rare and it's not something he plans to do again. But now 100 basis point hikes, that's going to be very interesting how he responds and what he says. Now, we're going to talk about some key levels here on the charts on what I'm looking at, because right now, even though we're under a bear indicator within the 1 week, there are some levels to watch, right? So if we go back down and we retest the lows of 362, the next support level that I'm watching is all the way down towards 328. And in between that, if you put the 1 day, you can actually see it here. The next level that I'm watching, if we break through 362, is down here at the 330s and 340s range, right? Those are the key levels within that area that I'll be watching. But the most significant one is back down toward 322, 323 area, because that right there is one of the points where it will get us right back to the highs before the COVID crash, guys. This is very interesting how we're getting pretty close to it. We're not that far from it. If you actually think about it, if we break through 362, and it could be a very significant support level that can mean where's the bottom? Well, it'll be a big question mark because there might not even be one, right? When it breaks through certain thresholds, yes, you could use history in the chart and stuff, but that's like extreme weakness. Now, do I think we're going to head there in a straight shot? No, I think it's going to be volatile, just like the last several months. You could see how things have been falling back and forth, and every time we hit wire Fred borders, we tend to have small reversals, and others are weaker, others are stronger as things continue within the volatility, especially followed by a bull indicator. And then same thing here, no bull indicators, and all of these have been weak. So I'm going to be watching if we go right back down towards 372, if we break through that, how it reacts between 372 and 362. And if 362 is broken through, the next level I'll be watching is down towards the 330s, guys. It's going to be very interesting, like I stated, how it reacts. Could this find a bottom? We'll see. But 100 basis point hike could shock the markets. Now, this CPI data, though, when you zoom in, the markets didn't react to it in a negative way, right? Like things actually overextended, and this was almost like a dead cat bounce because things are coming right back down. Now, if this turns out to hold true, this bull indicator that popped up at 378, and this is a fake out, this could be the setup before the next bull run, right? And then Jim Cramer is going to start looking like he's right. He stated today will be the market bottom. And he stated this yesterday, right? But after the rate hike of actually now pricing in a possibility of a 75 basis point hike a lot higher, and then also even the thought of a 100 basis point hike, it's going to be very hard, in my opinion, for this to be the bottom in the bigger picture. It could be the bottom for this week. It could be the bottom for the next several weeks, right? Just hypothetically speaking. But in the bigger picture, we may retest these lows here of 372, 373, and then going all the way back towards 362 and see if we can find a double bottom effect, find some support, or if we're going to break through 362 on the SPY and go even lower. Now, our SPY bot today was actually very volatile towards the end of the day, but at the beginning, it sent us out that bull indicator at around 10:30, 10:35 a.m., and things lasted all the way up to the highs here of 381 since around that bull indicator of 377 at 10:30 a.m. So things were moving upwards, even though the CPI data was actually coming in hotter than expected. Now, some people could probably say, oh, well, the market was pricing in that we may have hit peak inflation. While that could be a probable, speculative, reasonable approach, we don't know what the Fed is going to do yet. We can only assume, and they're going to try to go ahead and be aggressive. That's the only thing that we can think of, because their focus is to tame inflation. They've said it. And even the president has come out and stated, I'm going to allow the Federal Reserve to do whatever it takes to calm down inflation. Now, some people are saying, well, we could probably get Volckered. Some are saying, well, we won't get Volckered. One thing I do know, and again, this is not financial advice, this is my opinion alone, that volatility will continue to persist within the volatility of the markets daily. And I'm going to maximize within the moves using 42 vision. And that's what the members in the community are doing. And you can now join us, and you can join the members using these resources to maximize within the moves, guys. We've seen that things have been bearish since the beginning of the year, way back in January. This bear indicator has not changed. It is still down here in dip area within the volatility, and the 1 day has confirmed it as well. In this volatility was back and forth from January to March, but in April, things got a bear indicator. The peak was 450, and things have fallen since, and we're in the 370s, and we hit lows of 362. Now it's a matter to go ahead and watch and see if we break through 372, how we react between 372 and 362. Do we double bottom and go ahead and bounce off of this and go higher, or do we retest it and break through it, and then we have lower levels to be watching based off the history of the chart? And within these moves, I'm going to maximize. That's what I'm doing. My personal opinion, my personal approach. Doesn't mean it works for everyone else. Doesn't guarantee that it works for anyone. It's just the way I'm approaching it. And I'm going to maximize daily. Whether it's the SPY, the QQQ, or even individual stocks, I'm going to move with the volatility. Not against it. I'm not going to try to hope. I'm going to maximize and use 42 vision to be able to see the dips with the white with red borders and the rips, followed by the bull indicator once it goes into green, and then the dips right back down from the rip area to the dip area, followed by a bear indicator as an extra layer of confirmation. As always, guys, thank you guys so much for watching, and let's make some money.